All right. Welcome, everybody, to another super fun, jam-packed edition of Top Trades Live. I'm here today with Enrique for the second week in a row. Enrique,
Yeah, yeah.
welcome. Glad you
We're
could
we're gonna
join us again.
we're gonna get a nice streak here. September, I'm around basically all of it. So
Yeah.
although I think I'm in Baltimore next week, so maybe we're gonna do it live if it works out. Maybe we'll do it live,
All
but
right.
we'll
Well,
see.
we will see. We will see.
Yeah.
So we're here this week, kind of like where we were last week, where we have this unshakable market that just seems to want to crawl a little bit higher every single day. Nothing seems to be upsetting investors or traders right now. We're not seeing any volatility creeping into the picture here just yet. What's it going to take to see volatility come back into this market in this traditionally volatile month of September?
Yeah, well, there's the old Ernest Hemingway quote. How did your bankruptcy happen? It happened gradually and then all at once.
Yeah.
I think that when we're talking about corrections, I mean, look, let's take a step back. Pull up the chart of the S&P or the Nasdaq. They're kind of the same chart for all intents and purposes. Um, Back at the end of July, and if you could pull up the one with the 50, 100 day and 200 day, perfect.
Got it.
Back at the end of July, we had been making the argument that we were too extended and that we would need to see a period of consolidation. And in fact, that's what's happened. So while the market is technically higher than it was at the end of July, it's not up by very much. And we've gone 5 weeks with kind of going back and forth, back and forth, back and forth. I was talking to my partner, James, while I was hiking earlier this morning, and I said, look, I think that we have a gauntlet to run here in the month of September, having a little bit to do with seasonality, but having more to do with, we got an ugly jobs report last week, which the market did a great job of shaking off. We got an ugly jobs revision today, which the market has done a decent job of shaking off. But there are three more catalysts in front of us. The first one is PPI tomorrow, and then CPI on Thursday.
Yeah.
Those two are going to be interesting because what the market seems to be saying right now is job growth is weak, but the Fed will be able to cut. And so job growth isn't so weak that we're scared about the economy. Maybe if Friday's number would have been negative, and maybe if today's number would have been over 1 million. But it's weak, and we're going to see big rate cuts, so who cares? Is kind of what the market's saying to us. What'll happen if PPI and CPI come in hot, though, is it's going to be, and it's not technically stagflation. That's the word everyone will throw around, but that's not really the way to say it. It's going to be like oh wait, the Fed's boxed in. The job growth is weak, but they can't cut rates enough. And so I think that's going to be a tricky narrative. But it also goes into a final piece of this narrative that's funny that it just happens to happen in the month of September. September 30th is going to be another government shutdown period. And if you recall, back in March, the Democrats got a lot of criticism for not shutting down the government. And I read from the Democratic side, it's why didn't you do something and all that. And I read a great analysis. And just remember that you need 60 votes in the Senate to get through this. I read a great analysis in the Washington Post that basically said at the time, Schumer said, okay, we think Trump's doing a lot of stuff that's going to mess up the economy. And there's going to be all these court actions and all this other stuff. If we shut down the government, though, here in March, we're going to be the ones that get the blame for everything bad that happens. Well, this is no longer March. And so I think there's a significant chance that the Dems go to shut down the government. So the cocktail that you have is we're still extended from the 50-day moving average. We're still at our highs. We're still in a rough seasonal period. We've got decelerating jobs growth / no jobs growth. We may have accelerating inflation, and now we're going to see a government shutdown. Now, I think that's a very dangerous cocktail. Is it going to take the market down? I don't know. I mean, like I said, on Friday, I was impressed how well we shook that off,
Yeah.
the bad jobs report. What I would say is this, is if the market were at its lows or well below the 50-day moving average, I'd be like, I'd shake these off too, because I think the world's just fine. But we're not. And so I think we have a very risky period still for the next 3-4 weeks. Now, I'll then take this to the other side. I'll say this, if we get through that period and the market is just still around that 50-day moving average, it's off to the races. I mean, I think we're going to be up 5-10%. And I actually think we're going to be up 5-10% October, November, December anyways.
Yeah.
Like regardless of whether it's from lower or here. But
Yeah.
I think we've got this crucible to get through. But it is a little scary when you think about it. Like, and I'll just throw one other thing out there that I've been thinking about. If we didn't have massive data center growth right now, which I do think AI has entered into a bubble phase, we'd be in a recession.
Yeah.
Like that's what the numbers are telling us. I mean, let's define recession. Some people define recession by GDP. I define recession by jobs, right? You know, is like GDP is fine, but if GDP growth is negative, but you have a job and jobs are growing, well, people can pay for stuff and people can pay, more people to get jobs. If job growth is negative, well, it doesn't matter what GDP is doing. You're not buying anything, and that's the nasty equation. So look, we've shaken it off. I think the next 3 weeks are still dangerous. But I do think we set up into a strong year end. But I'd watch, tomorrow and Thursday, and you're going to start hearing about this shutdown. I know the shutdowns don't really mean anything in the real sense in the intermediate term. I've lived through, I think I did the count once, like 86 of these conversations or some crazy number, and none of them really mattered. But it could matter in the short term in terms of a correction. So that's kind of how we're thinking about.
Yeah, I think that's good points. And I really don't think that the shutdown narrative has gotten any traction, because the first rumblings I even really saw about it were earlier this morning. I don't think it's top of mind at all out there right now, because I mean, all the speculation in the financial media right now is around, like there was this big front page story on CNBC on the website yesterday about the chance of a 50 basis point cut. It's so minuscule, and yet they're blowing it into this big headline. I just found that kind of odd that that's the direction that they're kind of taking speculation.
The shutdown hasn't made it yet because it's 2 weeks from now, 3 weeks from now, and the media doesn't want to, and Schumer hasn't talked about it yet. But I think he will. Look, it's our job to be ahead of the curve. Like, I think we've done a pretty good job through time of talking about what the narratives. If you've done this a long time and you're really engaged, you can know what the next narrative is going to be. Now, what I'm going to tell you is I don't know what the price action is going to be. I know the narrative is going to be about stagflation and the shutdown. The narrative might be, oh, well, the market's shaking that off. The market's awesome. The market's going to new highs. Right. Or the narrative might be, oh, well, this is really going to lead to a correction. We're going to let price know that, but without a doubt, we've been in a consolidation. And look, bull markets, either they go through consolidations or corrections. But I will say this, I kind of have like October 15th, basically a month from now, as takeoff date, because I do think with what we've seen, we're going to have a very strong finish to the year, which is, by the way, the case in almost any bull market. Any time you've got a market that's up, I think we'll publish these numbers again when we get closer. But if you're up double digits going into November, it's basically a 100% chance that you're higher the rest of the year, which all makes sense. And right now the S&P is up 10.39, the NASDAQ's up 12.78. But I watch these next 4 weeks.
Yeah, I mean, I think that, my game plan since late August has been just get through September and the middle of October. And then from there, it's going to feel like cake. And I really like what you said, too, about September performance and how that's going to kind of dictate the rest of the year. I mean, if we just get this little tag of the 50-day, which, by the way, we have not come anywhere close to touching the 50-day since it gapped up above it on May 1st. That's crazy.
Yeah, it's a long period. It's a long period, and we've played with it a little bit. So what I'd say is this. I'd say it's in the next 3-4 weeks, I think there's a 5 or 10% chance that maybe a 5% chance that we really thrust higher and really move to new highs. Very low probability.
Yeah.
And what's left, 47.5, 47.5 is either consolidation or correction below the 50-day. And if we get below the 50-day, it's just, I'd say it's all probably almost a third consolidation, a third below the 50-day, and a third all the way closer to the 100-day.
Yeah.
But so I think it's an asymmetrical risk reward to, really break to new highs. But, we'll see. The good thing is, and let's go back to, these are our opinions. The reality is both of our portfolios are positioned that, if we do break to new highs, we're going to do very well. Our readers are going to do very well, and all that. So, but it is a time to be cautious. I just am not being, I'll give you one example. I've pulled back on layering in too many, and you've done it too. Too many breakout trades right now. Yeah. This is not the tape where you want to be trying to play too many breakout trades. Once we get through the next month or 3 to 5 weeks, I think it will be a very interesting period for that. But it just changes your strategy a little bit in the short term.
Yeah, I'm trying to diversify and not be so directly exposed to some of the more overextended trends, and also just buying more time, too, for me. And just trying to get through and look at these November strikes instead of maybe October ones right now.
Yeah, that makes a lot of sense to me. That makes a lot of sense.
Yeah, that's the way I'm thinking about it. And again, I don't know what's going to happen. We could rip right through here, but seasonality, history, and us being this far extended, I feel like you were saying, like a lot of the typical breakouts probably aren't going to extend, or at least they have less of a chance of extending in this type of market than they will in November, December, when they're probably going to rip. So if we just keep that stuff in mind and we adjust our strategy accordingly, we're not going to give back as much in, strikeouts over this type of time period, and we can set ourselves up better for, Q4.
And I sometimes look at my stupid analogies, right? I sometimes like the sailing analogy, is that, if you're out in a sailboat, you sail a different way when there's storms on the horizon, when you're in the middle of the storm, or when the water's all clear. And, we were in a storms on the horizon market in terms of a correction or a consolidation. And so we're going to sail a little bit less aggressively than we would once we get through this period, or when we're on the other side of the correction or consolidation. And that's just, it's like settings on a Dow. Again, I know nothing about sailing, by the way, but it's like, how you set your masts and all of the sails and things like that. So we're taking that into account, which I think is the smart thing to do. Because you really don't want to get tagged for a loss, and it's all out there for us to see. Now that gets back to how much are we ahead of the curve or how much are we part of the curve? Is like how much people are talking about this already, and therefore it's getting into the market and all that. And I don't have an answer for that. I just know now's the time to be a little bit more cautious, and there's going to be a time to be there'll definitely be a time to be a lot less cautious, and perhaps there'll be a time to be much more cautious. But right now, I think we're kind of in that middle ground, leaning towards let's let it breathe a little bit.
Yeah, no, I totally agree. I'm glad we're on the same page with all this. And I also, during times like this, I take some time to sort of think about different scenarios and how things could play out. We have, like you hinted at, we have PPI, we have CPI coming up, and then we have the cut looming later this month.
Yeah.
I'm looking at crypto, and it seems kind of interesting here, especially Ethereum to me. I know Bitcoin has, been lagging a little bit here since it started dropping and peaked out in early August, and Ethereum looks really coiled and ready to do something here. Do you think crypto has a chance at making a big move into a cut or into anything crazy happening this week with some of the inflation data?
It's interesting. Ethereum's a little bit of a coiled spring right now, right? Yeah. That pattern is one historically that's, what's that, like a flag or what? It's usually kind of breaks one way or the other.
That's how
what I'd say, is crypto has consolidated very nicely. Bitcoin's been consolidating here. Ethereum's now consolidated, a little bit like the market around the 50-day moving average. I do think, and this worked quite well when we talked about it last week, pull up the home builders. Pull up. I guess there's an ETF called Nail.
XHB.
Well, have you ever heard of Nail? This is the three times. Here's the
Whoa.
three times levered home builders.
Wow.
So it's getting nailed today.
Yeah.
But but this has acted really well. You can see the move that it's had the last few days. Last week going and the jobs report, it really spiked off of that. But I think these are the kinds of things to watch that will also help power the market to new highs. So I think with rates coming down, crypto, home builders, they're all constructive and not extended. But overall, it's the extended charts are sort of beginning to consolidate. I mean, go look at the Nvidia chart. There was a time I heard on, look at that, that's below. What did we say about Nvidia? What did I bang? What did I say over and over and over? It was a 100% guarantee it was going to see the 50-day moving average. Literally, that's what I said.
Yep.
And it's exactly what it's done. So, Nvidia could actually be seen as a precursor for the market, which is, and this is interesting, markets at new highs, NASDAQ is at new highs, S&P's at new highs. Nvidia is definitely not at new highs. And so, I think you can kind of watch this chart. And if Nvidia rolls over to 160, 150, which I think is very likely, then the market's going to correct. If Nvidia holds in and consolidates, the market grinds higher, until everyone's ready to join the party at year end. But what I really particularly like, I like the idea of Bitcoin and Ethereum into year end. Yeah. I think right now they have some more work to do, especially Ethereum. But I think you're going to see 135, 150 into year end as it kind of just dawns on people, what role this plays. It's fascinating too. I don't know the data, but I'm going to show you something here. Bitcoin was at 91,918 at the beginning of the year. And so that means that it is 591,918 divided. Bitcoin's up 20% this year.
Yes.
Has there ever been a year where Bitcoin was plus or minus less than like 30 or 50? I don't even know. Like I'm curious to look at a chart. I'm gonna look it up right now.
I have this. If you look down here at the bottom right hand corner, right here, I have the seasonals from the past 2 years on here, and this is actually the seasonal low right this week.
Dude, I'm gonna show you something. Well, that's cool. By the way, I'm gonna show you. Hold on. I'm gonna put this up. So Bitcoin, I did find it quick on AI. It said annual returns for Bitcoin. 2024, 171, 23, 238, 22, negative 50, 21, 125, 2020, 121. The fact that Bitcoin, oh wait, I got the full chart here. I'm just going to read the absolute numbers. 171, 238, 50, 125, 121, 76, 31, 81, 223, 65. So a 20-30% move in Bitcoin will be really interesting. I think it speaks to the maturation of it as an asset class. But I like the crypto idea. Kind of going into this. I think that's something you could buy now and feel good about living through, a correction. Although with Ethereum, I would almost put that Nvidia and Ethereum chart on top of each other, because I feel like they're gonna. It's just this risk asset concept, right?
Yeah. Yeah.
Is that, either Ethereum's going to follow Nvidia or Nvidia is going to come back to Ethereum kind of thing. We could do that with any number of risk assets. And by the way, sometimes people might ask, well, what the heck does Ethereum have to do with Nvidia? Why are you saying that? For much of the market, flows just sort of go to risk one way or the other. Yes. And so Nvidia is one type of risk asset, the largest cap, biggest. Ethereum is another type of risk asset, much smaller cap, much more high volatility. But I like that. And I think the home builder trade is still very interesting.
Well, yeah, it goes back to in 2022 as well, when there was a lot of noise out there, people complaining about crypto dropping, during the bear market because of whatever their thesis happens to be of crypto that has nothing to do with what's happening in the market. It's like, I got news for you. Bitcoin's a tech trade, Ethereum's a tech trade, and when those tech growth stocks are going down at that pace they were in 2022, Bitcoin and Ethereum are going to go down too, because that's the nature of the risk taker, right?
And I'd subtly change what you said. I'd say it's a risk trade, because
Yes.
we're going to get periods of time where it's not just tech. Back in the day it was SPACs plus tech,
Sure.
and all of that. So but yeah, I think that's the case right now. So yeah, but I look, if people want to be aggressive out there, I kind of like the home builders on a pullback today. Nail,
Yeah.
I think that's something that definitely could, under-owned, charts very constructive. I think that's something where you could see, a 30%, 40%, or maybe even a 50% return into year end. And it's just not as owned as the AI trade.
Yeah, and it's a rate play, and we were talking
exactly.
We were talking last week about the rate plays, XBI, the biotechs. These are the stocks that got crushed in the rising rate environment, and now they're starting to come back to life. And you can see IWM. You have small caps coming back to life here again.
So,
another rate-ish play.
So this is why I think for the overall stock market, and I don't normally put much importance into macro reports, but let me say that a little differently. Is any given individual macro report for the intermediate term of the market, 6, 12, 18 months, almost never has any relevancy. I mean, I've been around for, how long have I done this? 30 years. So 500 months, and I probably could say a dozen, 20 months of those 500, did I actually see any report that I thought had any relevancy for the intermediate term? And by the way, for most of the time, it doesn't impact the short term either. Like, they're just kind of data points. People like to talk about them, but the market's going to do what it's going to do, and then they're just going to create the narrative afterwards. Right now, I think we're in a position where that's not necessarily true, though. They could have. So the reason I say the PPI, CPI is if those come in particularly hot, then you take the wind out of these trades, right? Because what happens is then they go, oh, the Fed can cut, but it's only going to be 25 basis points, and it's not going to be enough to help the home builders. So I think that's probably the thing that can shake the market the most, is this kind of concept that the Fed's boxed in and they can't cut enough, because we certainly don't seem to care about poor job reports. That certainly doesn't be something that's shaking the market at this point.
Yeah, definitely. Let's move on to something else that's happening in the markets right now. How about them gold miners and gold and silver? I mean, this is another rally that's just stretching into the stratosphere.
Holy cow.
I mean, I'm in disbelief at how far this has gone without retracing right here.
I am and I'm not, because we saw the same move in April, right? Like, we're at an RSI on gold of 80.
Let's get that
and on. Back on April 22nd, we had an intraday spike. Yep. And by the way, we hit an RSI of 77. So I think that this actually fits with the way gold's recently traded.
Yeah.
I feel like that patterns that are most recent are good precursors. So what I would say is that if you would have told me this pattern in gold, off of data from 2 or 3 years ago, I would have been like, whoa, but this is now how gold is trading. Yep. I could go through multiple speculations of why gold is trading this way now, but I kind of don't care. It doesn't matter. Like, the why doesn't matter. It's just the is. So it doesn't surprise me. But what I will say is I'll go back to what we said in April. And by the way, on this call, we've been very constructive gold for the last 2 months, 3 months, as it's consolidated along that 50-day moving average. You've asked, what do you think of gold? And I'm like, I love it. It's really interesting. I love it. It's a beautiful consolidation. It's getting ready to break out. I think we actually said that 3 or 4 weeks ago. It's getting ready to break out. Now, did I think it was going to break out like this? Well, I didn't, but apparently this is what gold does now. But I'm setting up to what my next comment is that buying gold here, I don't love.
Oh yeah, I hear you.
When we actually went short it via an inverse ETF at the Maverick back in April, and we top ticked it to the day, it's getting into the conversation again. I like that trade. And one of the things I'll say about these commodities is that like their mean reversion characteristics are more powerful than than stocks, right? Gold's never getting taken over. There's not really a short squeeze in gold, versus a stock could do that. So look, great trade, beautiful setup. Miners have gone up a ton. People made a lot of money. I think we've been calling, certainly Paradigm's been very bullish on gold. We've been calling a nice setup. I would fade this here. I'll go back. Let's do something. 3 weeks ago, I was saying to sell your NVIDIA, sell your Palantir, sell your Roblox, and every single one of those things, your Robinhood, which is the only one that didn't go the way because of the S&P inclusion, although I'd be a seller of it right now. It was down until that. I would just be, as a trader, I'd be a seller of gold here. You have to be. Again, as a trader, as an investor, no. But with this kind of extension, I'll tell you right now, Maverick people, be ready. We might do a short gold trade again, which again, everyone thought we were nuts when we did it last time, but it worked out pretty well. So,
yeah. I'm still kind of mad at myself that I didn't take this extended breakout right here and buy and grab some of this right here. I know you can't grab everything, but
it's a nice one. What I like too about a couple things. Let me just make another comment too, is that remember, gold only really makes people money in risk on markets. We've talked about this. And again, I can't hammer it home enough that gold outperforms in bad markets, but that's because it doesn't go down as much as everything else. If you really want to make money on gold, you need to be in a risk on market. Every new high in gold happens when the market's actually hitting new highs. So if anything, that's a positive, but it's something to think about as we go into the next correction and breakout in gold, which, I'm thinking 6 months ahead now, that you can play it like this, like that there's a real opportunity to do that. So I think you're going to have another shot at it, I guess is what I'm saying, because this is how it's trading now.
Oh yeah, definitely. I don't know if I would jump on a short other than a tactical play like you were saying, but I definitely would be interested once it sets back up, drops a little bit, consolidates, lets those moving averages catch back up. I think you get another shot at another ripper in these stocks, because I think gold miners, and I'm gonna throw this on a weekly or maybe a monthly. I think we're just now even getting back to, so it wasn't until very recently that these even broke above those 2011 highs. That was right here, back in the middle of August. So once this chills out a little bit, I think the sky's the limit for these, because if you remember back to when gold was first breaking out a few years ago, the miners weren't playing nice at all. I think it was 22 into 23 when gold was starting to move there toward 2,500 or 3,000 or something like that, and the miners were just stuck in the mud. They weren't doing anything.
Well, and so just getting back to gold too, I love these moves in gold because this is such a well-established bull trend.
Yeah.
That a well-established bull trend in a stable, lower volatility asset class is something you can trade with more leverage. Now, again, I'm saying I would fade this. I actually looked it up. The position that we did was in something called DULL, DULL. We bought it on April 22nd and sold it on May 13th for a 13% gain in 21 days. And pull up DULL. It's just gotten hammered. I'm very intrigued by this trade here with gold where it is. So, but again, this is a concept that is hard for people to understand. I think we referenced this the other day, is in the markets, you sometimes need to have two things in your head at once, right? Is say, okay, as a trader,
Yeah.
also as an investor, but especially as a trader. On one hand, we're saying gold is an absolutely beautiful bull market. There's a ton of money to be made on the long side. You can buy this with impunity. You should probably buy it with leverage. And on the other hand, I'm saying, and I think it's an absolutely fascinating, potentially great short right now.
Yes.
It's almost because it's such a good bull market that's a better short right now. Do you know what I'm saying? Like if we were in if we were in like a back and forth, or there was no clear pattern, but this thing's pattern trading great. I don't know. I think leverage gold trades might be a really smart thing to do in the next 6 to 12 months, which is essentially what the gold miners are, by the way.
Yeah, sure.
I just prefer to do, if I'm going to short it, do something like Dole, because it's not getting bought out versus any individual gold miner could get bought out at any time. And someone's asking about silver. I mean, they're the same trade.
Same trade.
For all intents and purposes. Like, sometimes these diverge. Right now, they're the same. If anything, I'd say silver is a lower volatility version of gold. It feels like recently, which is a little bit of a change. But yeah, I think they're both the same trade. I wouldn't buy it here. I would potentially go short gold, but as an intermediate term trade from a consolidation phase, I think it's absolutely beautiful. Some of the nicest charts I've seen.
Yeah, and when we're talking about these things tactically, it's important to keep in mind that, I mean, we're talking about playing off of the emotions of the crowd right here.
Yes, exactly.
When you have a situation like this where everyone is seeing gold and these miners just rocket higher every day, and all that FOMO kicks in, and you have the herd just buying. And that's the point where Enrique is saying, where you take something like Dull and you say, okay, I can buy this here, and I can buy this here and maybe sell this at $3.90, maybe $4 or something like that, and bam, that's a really good quick trade.
Well, and the indicator I've got, and remember, this isn't our opinion. Go back to the chart of gold, pull up the gold chart and pull up the RSI. What's the quote from Platoon? Opinions are like a-holes. Everyone has one.
Right, yeah.
I use that quote. I have to be careful. I use that quote with younger people, and they kind of just look at me like, I'm like, come on, it's from a movie. Anyway, gold's got an RSI of 80. It just ticked through 80. So I just know things that have RSIs of 80 are definitely not buys. And more often, and sometimes they're shorts, especially when you're dealing with commodities. I'm going to go run. Actually, let me do this. I keep talking. I'm going to pull up a sheet that I have that looks at RSI and when it goes through an RSI, and it depends sometimes, because sometimes when things get very overbought, they go to another overbought spot. But I want to look at gold, and I'm going to use the DLG. I'm going to look at GLD at 80 and above and see how it's performed in the next, short term.
Yeah, even looking back while you're looking that up, at the extreme levels that it hit earlier this year, I'm seeing back in February 76, and then in March 75, and then maybe a little bit higher, maybe 77-ish in April right there. But now I'm seeing 78, 79. So this is the most overbought reading we've seen in GLD in 2025. And going back, the last time we saw such an overbought reading, or an overbought reading above 80 here, was in March of 24 into April, which is right when this breakout really started getting jiggy. So again, overbought isn't bearish. Overbought means there's more buying. People are buying. But you're going to see those resets along the way. And right now, with the highest reading that we've seen so far this year, I think it feels like fish in a barrel, like Enrique is saying right here, for at least some sort of retracement, coming back down for GLD, coming down somewhere in the low threes here, or at least coming down to 320-ish, blowing off some of that steam. I mean,
no, I think it's a very interesting tactical trade. And I'll give you one more thing. Let's just talk about Dole. I'm going to bet that people that are on this call, I'm going to bet a bunch of them on a crazy amount of gold miners. So, if we get that little correction, that consolidation, that the enthusiasm in gold miners is going to come in. Dole actually might be a good, what I call profit making hedge.
Yeah.
Right. So like, you're sitting on gold miners, you got all these big gains, go out and buy some Dole. And then when they pull back, and instead of taking a 20%, paper loss in your portfolio, you might actually stay where you're at, and then you sell your dole and take the profits and put it back into the gold miners that have consolidated.
Yeah, and again, I think that goes back to what you were saying, is holding those two ideas in your head. 6 months from
Yes,
now, 6 months from now, those miners, your thesis probably says they're going to be higher than they are today. Okay, yes. But 3 weeks from now, 4 weeks from now, are they going to be higher than they are today? The probability is very low that they will be.
that so someone just put in Barrick, and Barrick has a RSI of 85. I don't even I'm going into my sheet and putting like RSIs of like 75. Like it's not even coming up. Like, of when it comes up, when it's been like
Well,
that.
it's been a hot minute since miners have been this hot. Like I mean, like I really can't think of a period where they've been as hot as this unless I go back to like that 2010, 2011, commodity ripper that we had. But I
Right,
mean,
right.
I don't think there's any other period where you're going to find Barrick at 85 RSI. And
Yeah,
just
that's just crazy.
like
Like,
what is it right here? February, March of 22, it got into 78. That's as high as I can
yeah,
find right
yeah.
now.
So that's an interesting trade. Look, I'm going to say, the most valuable trade I think that we might give people on this call is take a look at Dole if you own a bunch of miners, because I think this is gonna correct. Like, there's no
Yeah.
doubt about it. It's going to consolidate. And when you're at when you're at an RSI of 85, a consolidation is a correction. So what do I mean when I say that? Consolidation means you go sideways. You stop going up. When you're at RSI of 85, you don't consolidate, you correct, which means that Barrett could be 26 in a nanosecond, where it was. And watch that PPI CPI, because I'll tell you the trade that's going to deflate. It's what I was saying before about the home builders. If those numbers come in hot, gold's going to be down, big. And it's not that because it's negative, it's because it's extended, right? Is gold's going to be down big because it just went up big, super fast, super quick. Pull up Barrett, by the way, again.
Yeah, sure. Get over there. All right, look at that. Whew.
Yeah, that's nuts.
That is nuts. I mean, what a beautiful breakout. Can't argue with that. I mean, this extension off of here, off of that move in early August. I mean, how many down days? 1, 2, 3, 4, 5, 5 days where it traded in the red since the beginning of August. That's pretty incredible right there. And you just have to respect the fact that it's overextended.
Yeah, yeah. No, I agree. No, it's interesting. Well, good. We're finding some good trades here. Like,
well, and finding good trades in what could be, a rocky couple weeks here. Like looking at the VIX, I mean, good grief. It's just like we're compressing again.
yeah. Well, Kirk here says, I love Enrique. Thank you, by the way. But I'm not going to limber enough to risk a short if I'm still buying gold. I hear you, but that's actually why I like the short more. Is when we did the short, when we shorted gold in April, like everyone was just like, I could hear the groan, like it was like, oh, you're short gold, and I was like, okay, that's what I want. That's a response I want to get. If everyone's like, if everyone's like, oh yeah, that's a really well thought out short, yeah, you should do that. I want everyone to be like, no, you can't. That's insane. It's insane to short gold. Okay, now shorting gold's not like shorting GameStop, folks, or there's a limit to how much gold is going to move, because it's not a microcap stock with a big short interest. So I switch it around. I'm like, the more overbought and oversold things like gold get, the better trades they are, as opposed to a stock. And again, I know that's hard to wrap our heads around.
Right. And I'll go back to, just to add a little bit of flavor to this conversation. I don't remember which technician it was, but I remember somebody several years ago said something I thought was really profound and interesting, where that any argument about a stock, bulls versus bears, is usually just an argument about time frames and not about the stock itself, which I think is definitely true here. I mean, we're not arguing against a longer term gold bull. That's established. Gold is in a massive bull market right now.
Beautiful bull market.
We're talking tactically. We're just talking time frames. We're talking about playing those extremes.
Well, but let me
Sure.
take off that too. I'm talking about making money. Like,
Yeah.
I'm gonna tell you this: if you not even put a gun to my head, I don't need a gun to my head. Go and buy gold right now. You got a very good chance of losing money or not making money in the next 4 to 6 weeks.
Yeah.
Going and shorting gold right now, you got a very good chance of making money. Are we here to be right intellectually, or are we here to make money? Well, if the first step in the next I care more about the next 4 weeks in trading than I do the next 4 months, especially if it's going to go against me. So the
Yeah.
risk reward trade right now is to be more short.
Yeah. I'm going to go back to the market here and see what we're doing. Yep. We're still just punching along here. The S&P is just sitting at break even. I wouldn't be surprised if we just closed like this today and everybody holds their breath into tomorrow. I don't know if we're going to get a big reaction from the number tomorrow, but it certainly feels like everybody's just sort of waiting, and we're on pause at the moment for.
Well, and that's what it doesn't. We could go through breadth statistics and oscillators. It does feel like the market is sort of, yeah, I agree with that, waiting, teetering, and that's why I said I don't feel that the risk of breaking out higher just seems very low until we navigate these next 5 weeks. And then that's a coin flip about we either keep on churning or we risk sliding lower. And so that's where that kind of colors all of the exposures and the trades that we're doing right now.
Yeah.
So
I mean, like you were saying, I think the Q4 is going to be a big one no matter what at this point. I think the numbers don't lie, and we're going to have a melt up into the end of the year, barring some sort of unforeseen whatever that happens out there. But selfishly, I would love to see a little bit of a reset, maybe a bit of a hard reset, just to inject just a little bit of fear in the market, because I think that really sets up beautifully.
no, I think it's a healthy thing. It's a
Yeah.
healthy thing. I think that if we just consolidate sideways, it's not as good for the 6 to 12 month, although it's probably fine.
Yeah.
Yeah, I think it could be. The only thing I would say caution about that is that those corrections, to be a real correction, it never feels comfortable.
Right.
Right. You
Yeah.
got you got to be annoyed. You got to feel some pain. You got to be looking. The only other thing I'll put out there, and I don't know that this will happen before year end, but I want to be on record with this. And we published it in Truth and Trends on Monday. And this view of mine did not come from the picture that went out of Putin, Xi Jinping, and the Indian prime minister. But like, I do think that in the next 6 to 26 months, we're going to see China take Taiwan. Like, this is going to sound crazy, but let me take a step back. For those of you who read the Truth and Trends that we wrote, the single most important company on the face of planet Earth is Taiwan Semiconductor, TSM. They make chips. They make 30% of the total chips on Earth are made by TSM, which is the highest market share by far. 70% of the dollar revenue of chips are made by TSM. So let's think of dollar. That's the high value chips. So they probably make 90% of the high value chips. I'm going to give you something crazy to think about. We're trying to stop the Chinese from getting these high value NVIDIA chips. Every one of those high value NVIDIA chips is made in a Taiwan semiconductor plant 100 miles from mainland China. So that chip you're not going to sell to me is 100 miles away. So China, this is not an if, this is a when. China at some point, and they've been building up for this for years, I think that's the way they're going to do it. China doesn't like wars. Like, China hasn't been a war since 1979, and that lasted a month. China's going to line up everything, and then they're going to call up Trump, and they're going to say, hey, here's the deal. We're going to take Taiwan. Okay. Now, this can go down one of two ways. We can either do a negotiated return of Taiwan with the Taiwanese government underneath the threat of our military, or we'll just go take it militarily. And we'll take it. It might take us a day. It might take us a month. There's no stopping it. We're 90 miles away. You're 6,000 miles away. Whatever. This isn't even really a debate. Okay. They're 10 times. It's China versus Taiwan. It's like the United States trying to take Arizona. Okay. It's gonna happen. And when that happens, I think and the reason it happens partially is that China's always wanted it, but Taiwan, TSM is the kill switch. So if we don't play ball and they take Taiwan, NVIDIA, what happens to NVIDIA? Well, all their chips are made in Taiwan. There's no NVIDIA. NVIDIA is a Taiwanese company. Sorry, it's a Chinese company all of a sudden. So, but I say this, and we're going to write a piece on Thursday about how to prepare for this. But these are the kind of black swans that you need to have in the back of the head that you need to think about. But this is one that's coming. I think they do it during the Trump administration. And I got to tell you, it feels a little bit sooner rather than later that they do it. And, get ready when this happens. And then I'm going to lay out on Thursday how you can sort of prepare. The real answer, though, is for some things, like a big recession or this, there's no way to completely, inoculate yourself. You're going to take a hit no matter what. It's how you react to that hit that's going to be the difference between people that, maintain and grow their financial wealth and people who lose it when something like this happens. But that is a big external event that I don't think is on anyone's radar screens that I think is something to watch for. So someone's asked me about Arizona. Let me just say that too real quick. So the Arizona TSM plant, is hugely important. The Arizona TSM plant can handle right now on actual production less than 5%. I think it's like 2% of TSM's total output. It can eventually ramp to around 10, 15. So what you would see happen, and when this happens, what's going to happen is, Taiwan just turns into Hong Kong. Like when the Chinese took over Hong Kong, it's not like all of a sudden Hong Kong companies didn't do business. I think that TSM stays a publicly traded company. It's just that begins to have a lot of Chinese influence on it. But I think TSM goes in and doubles and triples down on the Arizona plant. That's one of the reasons why, and I said this maybe on this call or another, we gave $10 billion to Intel, and then now we've asked for equity. I think we should be putting $30 billion into Intel, or $50 billion. Like, I think we should be putting $50 billion into TSM, because we're going to need this. This is the kill switch. If they take TSM, it's literally a switch and just goes, boom, world shut down. Asia, Europe, the United States, we own the chips. What are you going to do? So we need to get prepared for this. I think the Trump administration understands that. That's also why I think there's a negotiated handover and not a war. Because some people have said, well, America will just bomb the fabs. Well, what does that do?
Yeah,
we're in the dark age. Then everyone's in the dark ages. That's dumb. That's a global recession right there. But that Arizona, and not just because I'm from Arizona, so Robert Jake, TSM and merger with Intel. I look, if I were in the administration, I'd be saying, guys, look, this is going to happen. They are going to take Taiwan, and we've got a TSM problem. We should be working with TSM and Intel to put as much money as possible to build as much foundry capacity outside of Taiwan as possible. Like, it's just crazy. I don't know that in the history of technology, and in the history of economics, if there's ever been a single company that's this important to the global economy as TSM is right now. And it's 90 miles. I did a map in the piece. It's 100 miles from the TSM fabs to China's mainland. I literally went onto Google Maps, put in TSM Foundry, and drew a line on it. So, this is something to watch out for. And by the way, we talk about AI. You want something to bust the AI bubble? China going after China taking TSM. NVIDIA gets cut in half.
Yeah. Obviously, you're thinking if and when this happens, there's going to be an extreme immediate market reaction to
Crazy market reaction.
But
how
do you think that plays out over 3-6-9 months?
I think it's a huge buying opportunity, to be honest. Part of it really comes down to the administration and how do they play it. Okay. The way to play this is say, okay, here's the deal. We understand you're going to be taking over this house. There's nothing we can do about it. We're going to hand you the keys, but here's the negotiated handover terms, right? TSM chips are still available everywhere, where there's a trade deal, blah, blah, blah. You kind of flip it over into, you guys are going to do this, and in exchange, we're not going to fight you. Because we both know you can win, but we both know we can beat each other up really bad, right? So let's figure out a transition. And so I think the market, but the problem with that, that's not like something, it's like, how would I explain this? I'm trying to think of an analogy. We have it in our head as America that we can stop this, but we can't. But it's a lot of pride and a lot of like embedded ego of the West that it's going to be able to stop this. So I just don't know whether we come to the inevitable conclusion in 2 weeks, 2 months, or 20 months. And to the extent it's 20 months, it's really nasty and a global recession. And don't buy anything. To the extent that it's 2 months, which I think is more likely. That's why I say that I honestly think this is going to be a takeover by press release. That the Chinese are going to call America on a Friday and be like, hey, guys, we're going to take over Taiwan. So again, you got the weekend. We can talk about some basic terms to just do this nice, or we're going to invade on Monday. And everyone will be like, why would they announce their invasion? Because they don't want to invade. They don't want to have, as much as I think the Chinese are very, I don't want to say evil, self-interested actors that really don't care about anyone else. What they do care about is they don't like conflict. They haven't been in a war since 1979. America's been in what, a dozen? So that's just a fact. So it's going to be something that ultimately will be a huge buying opportunity, because ultimately the right thing is done. Is owning TSM and not having any of those chips go anywhere else in the world is not actually a good outcome for China either. They'd rather have access to the chips themselves in this giant, vital Taiwanese economy, et cetera. But it's going to demand a response, and thank God the Trump administration's here, because I don't even know what Biden or whoever was signing things for Biden would do in this instance. I think that Trump will actually get it and be like, okay, we got to make an aggressive move. This is not going to be something to be solved by a committee when this happens. But yeah, this will shake the markets in a major, major way.
Well, all that aside,
and Scott Fritz, Intel isn't up to the job. I totally agree, but it doesn't matter. We're gonna have to fix it one way or the other. Yeah. I think as America, we will be up to the job. Intel's not up to the job. The Arizona TSM fabs are operating at a quarter of the capacity of a quarter of the efficiency of the Taiwanese fabs. But it doesn't matter. We're going to have to figure it out. And we will. I'm not worried about us figuring out at all. We know how to do foundries. We knew how to do rare earths before the Chinese put all rare earths out of business. We knew how to do foundries before, and it wasn't TSM that didn't act like the Chinese. We'll figure it out. It's just not something that's going to be done in a month or a week or a month. It's going to take 2, 3, 4 years, but it's going to take 100 billion, 300 billion. I mean, let me give you this one last thing. We're putting 600 billion into data centers. I'm just going to go off this. OpenAI just came out and said they're going to lose $118 billion in the next 5 years. So I just want to posit this. OpenAI's got a $500 billion valuation. They do 18 billion of revenue, and they're going to lose 23.5 billion each of the next 5 years. I'm guessing that's front end loaded. So, we're investing 600 billion in data centers to feed that. Like, I that's pretty ugly. What happened if we should be Amazon and Meta and all that? They shouldn't be putting 600 billion in data centers. They should be putting in foundries. That's the solution, and it's going to be. I'm not even saying this is what's going to happen. Is I think you end up seeing those companies go and say, okay, we're going to go in, we're going to take our CapEx budgets, and we're going to help build this foundry so that we have it here in America. But anyways, I wasn't trying to go off on a tangent. I just wanted to share something that, like, when this happens, everyone's going to remember this conversation and be like, oh, okay, I can see what's, because this is a when, not if.
Yeah. Well, and again, I think this goes back to everything that we've been talking about. And it's so important to walk through these scenarios and get them in your head well before they happen. And that way you can gauge your reaction a little bit better instead of just being slapped across the face by something like this. Because if you think things out and you plan out these scenarios, whether it's, a Chinese Taiwan takeover or the price of gold, if you have a roadmap in your
Yeah.
head and you know what you're and you have an idea of what you're going to do, I'm not saying you're going to execute it perfectly every time, but you have a much better chance of making the right moves instead of making some sort of panic move that's going to cost you a lot of money.
Plan the trade, trade the plan. Like you need to think about. So this is why we spent so much time right now talking about what could happen with the nasty September. Why I bring this up? Because look, when this happens, and I don't know if a nasty September is going to happen or not, but I'll tell you, everyone here is prepared. We've talked a bunch of ways of how to deal with it, how to react with it. I'm now talking about a bunch of ways how to deal and react to this. Is in a bull market, everyone's I'll go back to one of my quotes. Everyone has got a plan until they get punched in the face. Mike Tyson, right? Is what they teach you in fighting is actually you get punched in the face a lot, and then you figure out how to deal with it when you do get punched in the face. We're kind of simulating that and going through these exogenous events, because that's the critical point where you're going to lose your wealth, is making bad decisions in these fulcrum points, is what can negatively or positively change your retirement in weeks. Vladimir Lenin. History happens. It develops in decades, and then history. I forget in history, nothing happens for decades, yeah. And then everything happens in weeks or something. I put it up on Twitter the other day, the Lenin quote, but that's the gist of it.
Yeah, and that feels like the case right now with the market just sort of marking time right here, nothing happening, and then when something does happen, it's going to feel like there we go, all at once.
There are decades when nothing happens, and there are weeks when decades happen. And by the way, that's true of the stock market. I'm going to just take the decades out. I'm going to turn that into there are months when nothing happens, and then there are days and weeks where everything happens, and you need to be prepared for those.
Yeah. I think that's a great way to end it. And I really appreciate you sharing all that and going into more detail, because I really did enjoy that Truth and Trends you wrote on Taiwan and Taiwan Semiconductor and all that. It's definitely food for thought and something to keep in mind, as we move through this potentially, not quite yet, but potentially volatile period in the markets. All right, folks, that's all for today. Enrique, thanks so much for joining us again. Great talking to you, and we'll see you next week.
Yep, and next week we'll get through some tickers with you all too. I know that we didn't do as much of that today, but stay safe, everyone, and I'll see everyone on the Maverick tomorrow.
Sounds good.
Thanks.